Welcome guys to the Cryptoverse DAO. This is the crypto news with the Cryptoverse DAO on a Friday. I'm your host Dharma. As per usual, we're gonna go through all the headlines for this week, kind of take a look at what's been happening, update you guys on developing stories. You know the drill. You drop a like if you liked the video, drop a comment if you did not. Let us know what we can do better, what we can do more of. Subscribe, hit that bell. Let's get right into it with the first kind of story we want to talk about. Crypto exchange Blockchain.com faces a $270 million hit on loans to Three Arrows Capital. 3AC, we've been covering the story throughout the week. Blockchain.com remains liquid, solvent, and our customers will not be impacted, is what the CEO has said in a letter to shareholders. It stands to lose $270 million from lending to 3AC. Like I said before, we've covered this throughout the week. 3AC is or Three Arrows Capital is the over-leveraged hedge fund that is now the subject to a liquidation order in the British Virgin Islands. 3AC is rapidly becoming insolvent, and the default impact is approximately $270 million worth of cryptocurrency in US dollar loans, from Blockchain.com. Three Arrows Capital, which boasted billions of dollars in assets under management earlier this year, has imploded thanks to a combination of plummeting crypto prices and poor risk management, with many crypto lending businesses becoming exposed. We talked about that, the contagion that is happening throughout. There's been several exchanges that have kind of followed the same similar kind of pattern, the same sort of storyline in the bear market. Smith pointed out that Three Arrows has borrowed and repaid over $700 million worth of cryptocurrency in the last 4 years. In the 4 years that the firm has been a counterparty of Blockchain.com. The CEO also emphasized that Blockchain.com remains liquid, solvent, and the customers will not be impacted. That's what he's saying as of the 24th of June. About a week ago, Blockchain.com and derivatives exchange Deribit were reported to be among the creditors that pushed for the liquidation of Three Arrows, also known as 3AC. Smith said 3AC had defrauded the crypto industry, adding that this company intended to hold them accountable to the fullest extent of the law. A person familiar, we've heard that a lot with these storylines, a person familiar with Blockchain.com's finances told CoinDesk the company was in good shape to weather the losses. He says, "We are not getting the sense that there is any kind of stress on the organization." This is what the person familiar has said. Interesting. So that's the story with Blockchain.com, how that factors into the kind of the fallout from 3AC. The next story is to do with Fairfax County and the short-term kind of nature of yield farming. So let's talk about this. Fairfax County continues to invest public retirement funds in the cryptocurrency space, highlighting the quote-unquote short-term nature of yield farming as an appealing portfolio diversifier. So Virginia's Fairfax County continues to be a prominent public institutional investor in the cryptocurrency space, and now they're moving into yield farming. As previously reported, global asset managers VanEck announced that the Fairfax Employees Retirement System and the Police Retirement System are both going to invest $35 million into the firm's crypto lending fund. The latest investment move by the two county-run funds in the cryptocurrency space since their original foray began. So they've been kind of looking into investment in the crypto space since 2018. Andy Speller, the chief investment officer of the Fairfax Employees Retirement System, has been reached out to by Cointelegraph to unpack their investment in VanEck's crypto lending fund and why they're making these moves, basically. And Speller has confirmed that the Employees Retirement System, the ERS, had committed $25 million to the fund, and the Police Officers Retirement System, the PORS, had pledged $10 million, so that's a combined $35. The investment will take place between July and September of this year, depending on market conditions. An initial tranche has already been received by VanEck, with Speller revealing that the ERS and the PORS have invested $10 and $5 million, respectively, just for the month of July. The move is certainly good news for the cryptocurrency space, which is currently enduring a severe downturn alongside conventional stock markets worldwide. The DeFi sector has arguably suffered the most with the collapse of the algorithmic stablecoin Terra. We covered this as well, causing a cascading effect throughout the space. As the wider cryptocurrency ecosystem weathers the storm, investment schemes and funds like the ERS and the PORS continue to see the value offered by the sector. Speller tells Cointelegraph, we have looked at the space as a diversifier with our credit/high yield portfolios, and particularly performance periods like the very short-term nature of the positions, which are up to like 1 to 3 months. Speller offered food for thought on the current market conditions, noting that a risk-adjusted basis outlook suggests that cryptocurrency markets haven't sold off any more than high-growth sectors like tech, life sciences, or government bonds. He says, we've not seen anything to counter the long-term thesis that more things than less will be digitized in the future, including traditional assets themselves. These types of markets shake out weak players and technologies and are overall healthy for markets and industries. I mean, yeah, that is true. The ERS and the PORS funds have managed to fare quite well amid broad market sell-offs due to their broadly diversified portfolios. Speller noted that both are top-performing public funds across short and long-term time domains, and expects the latest quarter of the year to be no different in terms of performance. Despite the first 6 months of 2022 being one of the worst performance periods on record, Fairfax apparently expects both systems to be top decile performers over the period. Speller says that the digital asset segment of their portfolio was very small, with the vast majority made up of traditional venture capital equity investments. So that's the lowdown on Fairfax County and yield farming and the moves that they're making in this space. Now let's talk about Binance. Binance gets the VASP registration for its Spanish subsidiary from the Bank of Spain. Changpeng Zhao, the CEO of Binance, said that compliance with regulation is crucial to the broader adoption of crypto. Crypto exchange Binance is now registered as a virtual asset service provider, registered by the Bank of Spain, allowing the exchange to offer custody and crypto exchange services in the country. In an announcement on Friday, Binance said that its Spanish subsidiary, Moontech Spain, was registered as a VASP by Spain's central bank on Thursday. It applied for registration in January. Cool, so Binance can now provide fiat currency exchange to digital assets and wallet custody services while complying with the country's AML, anti-money laundering, and counter-terrorist financing rules. So, cool. CZ has said that the development in Spain is a result of the company's hard work to make its platform centered on protecting users. He explained effective regulation is essential for the widespread adoption of cryptocurrencies. We have invested significantly in compliance and introduced anti-money laundering AMLD 5 and 6 compliant tools and policies to ensure that our platform remains the safest and most trustworthy in the industry. We've talked about this storyline a lot as well. We've talked about how important regulation is and that balance between security and privacy, I suppose. You know, the regulation that comes into force needs to not be kind of skewed in a way or kind of calibrated in a way that isn't beneficial to private investors. As an example, you know, this is something that's a massive deterrent right now. All this lack of knowledge that is in the space, it deters investors, but also there is this fear of being defrauded and what is gonna, you know, where is the justice if something does happen in this space? Is there regulation? You know, we saw with the Terra Luna crash right now, America and South Korea are kind of working together to bring, to bring people to justice. And that is, I suppose, moves towards regulation. Right now in the UK as well, there is a policy reform that is happening. There's like an 8-week run, a call for evidence from private investors, institutional investors, people in the tech and finance industries to sort of speak on, it's like a questionnaire on what crypto regulation, or well, specifically earnings from staking and lending, what regulation should look like in that space. So we're seeing pretty much across the board, what does that mean? What does that kind of bring about? It's mass adoption, right? That's what we're trying to do with the Cryptoverse DAO, bring about mass adoption through education, which is one of, I think, the pillars of the pillars that mass adoption will be supported upon. But it's also effective regulation. And truly, the operative word is effective, not skewed or strict. Not strict. The word is effective. So that's quite an interesting story. Nice to see Binance. Nice to see that storyline pop up in the news. The next story that we have here is Bitcoin, right? Okay, so the Bitcoin price builds its best weekly candle since March, despite the new DXY peak. 8 hours ago, from William Suberg is bringing us the sauce. The US dollar is breaking out yet again, adding to misgivings about the authenticity of Bitcoin's surge to $22,400. Cool, so BTC is on track for its biggest weekly gain since March. Not everyone's convinced that good times will last. This is the hour chart. Cool. Crypto sentiment highest since early May. Data from Cointelegraph Markets Pro and TradingView shows that at the time of writing, BTC against the dollar is up over $2,000 this week, nearly 12%. After spending several days trapped in a narrow ranging market, the pair managed to exit to the upside. The gains accelerating overnight into July 8th to see highs of $22,400, 401 to be exact, on Bitstamp. See that nicely bounced back to 200 WMA. Realized price levels both at just about 22,000. Let's see if it holds. By the way, BTC at BTC 24.8K would flip RSI back at 45. Sweet. Those highs alone are noteworthy. Coinciding with Bitcoin's 200-week moving average, an essential level in bear markets that has acted as resistance since last month. When consolidating around $1,000 lower, Bitcoin nonetheless is showing the potential for a trend turnaround. Beating out the 200-week moving average, however, will be no easy task. Bitcoin 22.3K was reached and all the highs have been taken for now, is what Cointelegraph contributor Michael Vanda Pope summarized in a Twitter update. Some consolidation and buildup is required, might retest at about 20.7K-ish before markets are ready to break above the 200-week MA, which will be a heavy one. Vanda Pop or Pope, I'm not really sure how to pronounce that last name, previously suggested that there is a quote-unquote probably an insane amount of liquidity above the 200-week moving average, and that breaking through could see a run as high as 30,000. Interesting. And then the sentiment will flip too. Very true. Very true. We do see a lot of very bear market, very bearish sentiment all across the board. Signs of change in the overall market mood were already visible on the day, however, with the crypto fear and greed index hitting its highest level since May 7th. At 20 over 100, the index remains in its extreme fear zone. Take a look at that. The latest price action is meanwhile not without its naysayers, some of whom expect deeper macro lows to enter before any significant recovery. Lots of people expecting 22 to 23K. It's the new 52K when price was at 47 to 48. Or the new 35K when price was at 31 to 32K. 16K comes first, in my opinion. I also do think consolidation is going to be quite low. It's not really going to probably bounce back from low 20s. 16. We've had predictions for much lower as well, but I suppose we'll have to just wait and see. This is what popular trader Il Capo of crypto, argued on July 7th. Later, he noted that Bitcoin was increasing despite renewed strength in the US dollar index, the DXY, and that spoofing on major exchanges was adding to the chances of the latest move being a fake out. DXY is going parabolic, Bitcoin going up a bit, and people are getting euphoric and calling for 40,000. Not a single bullish sign to support this move up, and price is still at 21 to 22K at the resistance. This is what he warns his Twitter followers. Rejection will be strong. Altcoins could drop 45 to 50,000. There will be no mercy. DXY stood at 107.3 at the time of writing, marking new 20-year highs. The US dollar strength is traditionally inversely correlated with crypto asset performance. That means when this goes up, crypto asset performance goes down, and vice versa. Yeah, no, absolutely not going to see consolidation this early. We're gonna see it dip down below. Yeah, well below here. Um, Maybe like 13,000, 16 to 13, somewhere there, and then rejection. The next story we want to take a look at is EU regulation. We looked at MiCA before, and we're continuing to look at EU regulated firm Banking Circle adopting USDC. Interesting. So Banking Circle was launched in 2016 with a mission to help payments businesses reach new global markets by avoiding the burdens of traditional banking. Banking Circle, a European bank focused on cross-border payments, right, is adopting a major US dollar pegged stablecoin for payment rails. Interesting, USDC. The firm officially announced on Friday the adoption of the USD coin, USDC, one of the more established stables on its platform as a payment acceptance, processing, and settlement method. The new payment feature is enabled as a part of Banking Circle's new service targeting banks and payment providers, allowing them to facilitate payments outside traditional bank rails. Coinbase, a major cryptocurrency exchange in the United States, will be one of the crypto liquidity providers for Bank Circle. The USDC adoption by Banking Circle is positioned as a quote-unquote a key step in democratizing global finance, as it provides significant reconciliation, speed, and cost advantages. Michal Ruparel, the head of virtual asset services at Banking Circle, told Cointelegraph that the USDC integration is the bank's first move into the digital asset market. Some of our clients have been serving the crypto space for the past year or two, and we want to support their growth, is what he's added. Banking Circle has chosen USDC as their first proposition because the biggest relevance to our clients at this point. That's what he says. We'll be adding another USD pegged stablecoin. We'll be adding other stables down the line, and those for other currencies as well. So they're not restricting themselves to just dollar-pegged stables. They're going to expand in the future, adding that the firm is targeting a limited number of asset-backed stablecoins in Q3 of this year. Ruparel also predicted that asset-backed stablecoins like USDC will become a more mainstream payment method in future, stating this will allow a lot of companies who sell goods, services, creative content, etc., the ability to sell, to collect funds, to receive earnings almost anywhere. Yeah, borderless. Removes a lot of the friction and time needed to transfer internationally. He's just literally, this is like a case for just mass adoption in general, just crypto adoption. You know, the transparency and the security and the immutability of smart contracts and all of that, like it makes sense, but also just on a very boots on the ground level, borderless payments is like one of the biggest kind of pros for just going bankless in general, hopping into DeFi, you know, getting into this aspect of life, of human life, I suppose. You know, it's a solid move towards the world that I guess want to see. You know, financial freedom is never a bad thing. Yeah, so headquartered in Luxembourg, operates as a credit institution under the regulations of the Luxembourg Commission for the Financial Sector. This is about Banking Circle, EU. Services in other European countries, the UK, operating under limited supervision of the UK FCA. And this is a little bit more information about USDC. Sweet, so that is the news breakdown. This has been the Cryptoverse DAO. Once again, do remember to like, comment, and subscribe if you're catching this on YouTube. If you'd like to engage with us live, do join the Discord. There's a link in the description below for the link tree. You know, follow us on Twitter, all of that good stuff. I've been your host, Dharma. Thank you so much for being a part of it. I will catch you guys on the flip. Take care. Bye-bye.